A beautiful morning to you. This is Ron Janish, and it is 5:35 in the morning, means that the New York market's going to open in about an hour, and today is March 22nd. Okay, this is the techniques I use are straight out of Andrew's course, and it's ANDREWSCOURSE.com website I operate so that anyway, this is a very real position right here. What you see over here, these are very real. These are not hypothetical. And by the way, I do have to tell you that I do not take on managed accounts. And one of the reasons is that my focus is on development of software that can automatically do some of the incredible things that Andrews did. And and so that takes the bulk of my time. For me to add on managed accounts, it just be like, just crazy. So I do not take on managed accounts. So and neither does anybody who works in my company, right? And so if you're looking for managed accounts by somebody who does Andrews, there's plenty of students out there who've gone through our program, and you can deal with them individually. This is, to give you an idea of what we're looking at, this is a May soybeans position. You can see we went short at, oh no, we went long, I'm sorry, at 32.28, which would have been, 32.28 would have been where? Oh, below here. Huh? Let's look at this in a different time frame. Yeah, that's a little better. Be about over here somewhere. Let's see. There we go. Be about over here somewhere. And as you can see, obviously the market's gone up. We're going to talk a little bit about money management today. And the technique that I use is so simple that it doesn't tug at me psychologically, which is really kind of neat. Okay. And so I don't have to spend a lot of time wrapping my head around the stuff. Okay, so at any given time, when I focus on some charts here, you'll see some numbers over here, and this is the actual price we got in at. This is the actual present position, if any, and this is the open, P&L open. As you can see, this number here has been going down, and this number here has been going up. And so this is what it is. This is where I have my present orders in, and we'll just wait and see. Okay, on this one here, who knows what's going to happen? But I'm looking at ideally it going up, and then when prices go up here, where I have a limit to order, is that I would then take profits. So now that may not happen. I may choose to get out early. We'll see. I have my morning coffee here. Keep my throat moist. So anyway, we're going to, okay, how I deal with money management is incredibly straightforward. For the most part, most of the time, what I do is I put on one position, what I call per unit. And so what's a unit? Well, a unit, an account unit, let's say, would be $35,000. Okay. And so, and I might have several positions on at any given time. So that's something to consider. So now in some cases, when I think the probability is very high, I may increase that number. Instead of one per unit, I might do 2 or 3, but that'll also depend upon what I'm trading. So for example, if I'm trading something like the soybean oil futures, like here, notice I have +2 here, then having 2 positions on per unit. In this account here, I'm just trading 1 unit because it's easier for me to see, and the idea is that in my other accounts, which I don't show you all the time, is I might be trading more than one unit. Okay, so let's say hypothetically, if I have $350,000 in the account, I put on 10 positions. Okay, so anyway, so much for that. Okay, so what I do is I put on one position per unit, with the exception of sometimes I'll put on two, and that will be dependent upon the position that the signal that I use. So in the course we teach the Andrews techniques, and we show you the different ways that Andrews would use to determine when prices are at or near a reversal point, and several other things. So let's take a look here. Let's see, in this one here I've got nothing on. Nothing on. Yeah, here we go. And this one here I've got something on. What is this one? This is hogs. Okay. What happened was hogs went up here. We wound up going short, and we sent out a thing to the group itself, to the advanced group. That's a private email thing saying, hey, giving the idea that we put a position on, and we might tell you what our position is, we might not, and generally speaking, though, you should be able to figure it out if you're a course member. This is not rocket science. This is not overly difficult. So right now, this one here is saying that it's up and all this kind of stuff, and I know this is a bunch of hokum, and I'll tell you why. Because the market isn't open. Okay, and it's telling me right now that 68.05 is where we entered, and then the market is up here. And this is, and so what I find is that in the hogs, for some reason, before they open, this number here kind of goes up and down. And so if you have this kind of stuff going on in your account, don't let it bother you. This is just, I don't know, it's like a fly on the wall you can never catch, So you don't take it very seriously, especially before the open. It'll say, it'll make it look like the market has gone way up, and then when the market does open, gee, it goes down a whole bunch. So take a look for the thing itself. So anyway, what happened was we wound up going short up here. Prices did come down. We wound up buying some yesterday, and this is where we are. So we'll see. Now, and notice in this one here, we only have one position on. This here is the heating oil. Let's see, 1527.40. Where is that? 1527.40. That's about over here. Now, so what this says is that we wound up getting short somewhere over here. Okay. The thing you have to watch for in something like heating oil is that when this puppy moves, it's a significant dollar amount. So just from here to here, it's quite a bit. Okay. So whereas in the soybean meal, it's not as much in real dollars, and so you need to get a handle on that kind of thing and keep that in mind when you're trading. Here's coffee. This we wound up going short yesterday. See, it says -1, and we sold it at 144.55, and that would be right about over here. And coffee is another one that when it starts moving, it really goes, and the dollars start changing big time. So what happens for me is that right now I have 5 or 6 positions on, and 1 or 2 of them are in things that are heavy movers dollars wise, and one of them is coffee and one of them is heating oil. And one of the things you have to watch out for is stock is positions where the liquidity isn't real high. Here's one for an example. I probably shouldn't really do, but nevertheless did. And 78.75. Let's see, where would that be? It would be about over here. And so as you can see, this one's already in the red. Here it is right here, by a little bit. But that may change rather quickly, and so I don't have stops that I have put in there, but I have a mental stop, and I watch this during the day. Yeah. Here's the Russell, and this has gone down a bit. Truth be told, I wound up going short around here somewhere, and she went down real nicely, and I said, oh yeah, let's buy it, it's going to go up some more, and it didn't. So we wound up getting short, and baramba. And so our thing here will tell you 1381.30, which would have been about over here, is where we wound up getting in on this particular leg of the trade, and we're looking for it to go down a bit more. So anyway, back to the money management itself. You see how simple it is? I'm really only putting on one position for each one. And one of the things that can be tempting sometimes, and that is if you put on a position and it goes against you, oh, gee, you're getting an even better price. Okay, so let's say it comes up here and says, wow, I have all these different things that came in over here that telling me it's likely to go down, and prices are up here. Should I add some more positions? The answer is no. Okay, no. So actually, monitor that, because what you may find is that when you get this feeling that you should add a whole bunch more positions, it might be a signal that you should really just get out and walk away, step aside. Okay. So that's what I have going on. Not a whole heck of a lot, but as you can see, it seems to be making a little bit of money, and then some. So this is the Andrews techniques. Not all are winners. Here's a losing thing, and hopefully this will turn around soon. Otherwise, I'm going to be out of there in this very illiquid market. Probably not a good one to trade for most people. This is palladium. Let's take a look. Here's another one. Here's gold. Let's see, anything in there? Nope, no position in gold. So this is what we're looking at in gold, and the techniques themselves that I use are straight out of the advanced course and somewhat in the expanded course. I will tell you that in looking at what people use that are very successful with Andrews, is they'll use some of the techniques that we talk about in the course, and they'll combine it with some other things. And so they'll either combine it with some expanded course stuff, or they'll combine it with some outside stuff. Example of outside stuff is Clark, who was an absolute genius. Back in the year, I think it was 1990s or so, he was already combining stochastics with Andrew's stuff in a certain way, and he did incredibly well. He was doing intraday trading, and he had it automated at that time. And so, and he wasn't using stochastics to get the buy or sell signal. He was using stochastics to help him determine something else. Anyway, this is to give you an idea about Andrews and money management and what I do, which is really very straightforward, nothing very complicated that I have to figure out during the day. And if you're new to Andrews, take a look at some of the other videos, give you some idea of what we do. And if you're not already a member of the free group for our emails, they'll tell you when videos are coming up and a few other things. We do monitor it so that you don't get to see a Viagra ad or something like that, just go to andrewscourse.com or babsontrading.com and click on the subscribe to Precision Trader thing, and that's the free email group. If you are in the course itself, if you're a course member, you wind up getting emails direct, and the benefit of that is huge. Sometimes Yahoo screws up. And also, if you want to take a look at the charts I'm using, it's a lot easier because I just BCC you, and when I send out an email to the private group or the public group, I typically BCC it, and then you wind up having it right there on your desk rather than trying to figure out how to see charts in Yahoo and signing into that and all that other stuff. So anyway, so I thank you for your time and good trading. See you next time.